Hi, grade 9s. We're going to have a look at credit sales, which is the first new work of term 2. So, when we sell on credit, we talk about having debtors. Now, it's important to know that there's a few things that go on here. In grade 8, we learned about the accounting cycle, or the flow of transactions through accounting, and there's nothing different for credit sales transaction. Now, when we think about the concept credit, all it means is that we take the goods now and we pay later. In essence, we are selling on credit, so people would take goods from us and they would pay us later. Now, debtors are people who owe the business money and therefore are considered to be assets. Okay, so if we think about it, debtors control is a current asset. The second people owe us money, it is still our money, so it's an asset. Now, for a credit sale, we still follow the accounting cycle. Okay, so your transaction would take place. We then record it on a source document. Now, our source document that we use for a credit sale is called a credit invoice. Okay, so we sell on credit. People now owe us money. We issue a credit invoice. When people do pay us back, however, they will pay us back into the CRJ, the cash receipts journal, because now we would actually be receiving the cash. And the source document for that would be, and let's go in green, a receipt. Now, once the source document is recorded, we have to record it in a journal. Okay, so a credit sale is recorded in what we call the debtor's journal, the DJ, and any money received for repayment is received in the CRJ, the cash receipts journal. Now, both of these journals can be posted to the general ledger. Now, when we have a sales transaction, generally 4 accounts are involved, and that usually is bank, sales, cost of sales, and trading stock. The only difference now being is we substitute bank with debtors control, as we haven't received the money yet, but it's an asset. People now owe us that money. When we are receiving the money back, the 2 accounts that would be involved is bank, because we are getting the money, and debtors control, because our assets, our debtors, have now decreased because people owe us less as they have paid us back. Now, we have something called the debtor's ledger. Now, this is an individual account that keeps track of exactly how much the debtor owes the business. But for now, let's look more at credit sales. If we have a look at our source document, our credit invoice, like any other source document, it has a date, it has a number, who it was issued to, as well as the amount. So it ranges. Here we look at our quantity, so this is the amount of goods that we have. We have a description, so this is what has been sold, how much we charge per unit, as well as the total amount. Okay, so remember, credit sales, we are selling and people will then owe us money. If we look at the accounting equation, when we sell on credit, assets increase because our debtors owe us more. When our debtors pay us back, or all of what they owe us, in the form of debtors control, it will decrease our debtors, as our debtors no longer owe us as much, but bank will increase. So there's a neutral effect on assets, i.e. a plus minus. Okay, when we record credit sales in the accounting equation, we must remember that a sales transaction is an exception to the rules of two accounts. A sales transaction is a two-part transaction. Part 1, the selling price. Part 2, the cost price. So when we look at part 1, the selling price, we have sales as an income, which increases owner's equity on the credit side. We have debtor's control as an asset that increases on the debit side. So that's part 1. It should look like the following. We then have part 2, which is cost of sales and expense that decreases owner's equity on the debit side. And we have trading stock and assets that decreases on the credit side. Okay? The trading stock is being sold and therefore is no longer on the shelves. So, if we have a look at a practical example, we would have account credit, account debit. Okay? I will work through activity 3 with you guys, and you can then begin activity 4. So, if we look at our 3 columns, we have our assets, owner's equity, and our general ledger. Okay, so if we look at part 1, okay, debtors controls an asset, so we debit it, and our debtor owes us more, so it's a plus 1934. We then have sales, which is an income, which increases on the credit side according to AE Oil, and that affects owner's equity. But it's much better when we work through our individual activities, so I'll look at activity 3 with you guys. Now, a debtor's journal is very, very similar to a cash receipts journal. We have a column for our source document, a column for the date, who our debtor is. Now, this is important. It's the person who's paying us, the person who we sold goods to. We have a folio column, which is used as a reference for each individual's debtor's ledger. So, Glug stores could be debtor number 1, so they would have debtor's ledger number 1, or debtor 1. So, that's an example of what we use it for. We still have a sales and cost of sales column, because when selling on credit, we're still wanting to make a profit. And in order to do so, we need to have a markup on our cost price. Okay, we then have an example of a debtor's journal. So if we look at the following, they show us that we've got invoice number 113. We sold goods on the 2nd to T. Kidson, who is debtor number 3, and they tell us that the cost price was 700 Rand, so that goes under cost of sales, and we know that the selling price is 1,400 Rand. Now, each individual transaction that is a credit sale gets posted to the debtor's journal, so if we make a note there, all credit sales are recorded in the DJ. So all credit sales from any debtor are recorded in the debtor's journal. We then take a look and we see each individual debtor has what we call their own debtor's ledger. Now, you will see that this is T. Kidson's debtor's ledger. So each individual each individual has their own debtors ledger. Now, it's important to know that we're working with debtors, okay? So first and foremost, we need to keep track of how much they owe us, and we start off every account with the balance, essentially, but we call this account rendered. So this was the account rendered from the previous month, and the outstanding balance on this account was 2,100 Rand. Now you'll see that on the second, we used an invoice. So when using an invoice, it means we've sold on credit. The folio column, where have we gotten that information from? From debtors journal number 3. And T. Kitson bought for a further 1,400 Rand. So in our debtors ledger, when increasing, we put it on the debit side. When the balance decreases, we put it on the credit side. If we take 2,100 plus 1,400, it leaves us with a new balance of 3,500. Now on the 24th, receipt number 22 was used. If we have a receipt, it means that a debtor has paid us some or all of what they owe us. This information was pulled from CRJ number 3. T. Kitson paid us back 800 Rand, and our new balance is 2,700 Rand. We've credited 800 Rand, so we subtract that from the balance. If we have a look at activity 3, and I'll complete this one with you guys. Okay. They tell us record the following transactions in the debtors journal of ACE players, total the journal at the end of the month, and round off all calculations to the nearest Rand. Complete the accounting equation table. So, they tell us on the 5th, we sold on credit to Federer Fitments for 678 Rand. We issued invoice A121. They also tell us that the business operates on a profit markup of 30%. Round off the cost price to the nearest Rand. So, the date was the 5th. We then have the document number, which was, invoice A121. The debtor, this is the person purchasing from us. It is Federer Fitments. Okay, they don't tell us which debtor Federer Fitments is, so we can leave our folio column blank. And our sales column is 678 Rand. Now, in order to get our cost of sales, we need to divide. They tell us that the profit markup is 30%, so we take 678 divided by 1.3, and that should give us 521.53. Rounded off to the nearest Rand, our cost of sales is 522. If we put this sales transaction into our accounting equation, we start off with our date, which is the 5th. And I like to do this way a little bit more, not a little bit, but backwards. So firstly, the 4 accounts involved, we have step 1 and step 2. Step 1, we have debtors control. And sales. That's with our selling price. And then we have cost of sales and trading stock as our step 2. Now, the effect on the assets column in the first one is a plus 678 because debtors owe us. Okay, plus 678 under the OE column because sales is an income. Right, we then have a minus 522 under assets and owner's equity. Trading stock is an asset which is decreasing. Let's just put a minus sign here, it's decreasing. And cost of sales is an expense which decreases owner's equity. Right, if we look at the next transaction, on the 9th, we sold 2 different times. One to Roddick retailers and one to Hewitt wholesalers. So the invoice would be A122 and invoice A123. The first one was to Roddick retailers. And they tell us that that was 935 Rand. We take 935 and we divide it by 1.3, which should give us 719 Rand as a cost price. The second transaction on that day was to Hewitt wholesalers. And the selling price was 2,380. Our cost price, we take 2,380 divided by 1.3 as we're working with a profit markup of 30%, and it gives us a cost price of 1,831 if we round that off correctly. So now we would need to put that into our accounting equation. The first one on the 9th. Again, it's a sales transaction. So we have step 1 and step 2. We have debtors control. We have sales. We have cost of sales. And we have trading stock. Alright. Remember, step 1 is always a plus plus with our selling price, which was 935. And step number 2 is always a minus minus with our selling price of 719. And the reason is debtors owe us more, so I'm just going to put it increasing. And sales is an income, which is also increasing. We then have cost of sales, which is our expense, which increases or decreases owner's equity. And we have trading stock, which is being sold, which decreases our asset. Alright, guys, that's where I'm going to stop with you. Please can you continue with activity 3 and we can mark this at a later stage. Cheers.